I'm Lon Shaver, president of Silvercorp Metals. We are a profitable silver producer with a long track record of profitability and sustainability, and now we're looking to grow, initially with a mine we're building in Ecuador, but with sites set globally on other targets.
Lon, good to see you, sir. Right, we are talking to you kind of pre-PDAC. It's a very, very busy time, lots of news out there, but I thought this one was a conversation worth having. You're in an interesting phase of development for a producer in terms of bringing on these Ecuador assets. So can you talk us through, why did you make this move? Why did you need to sort of, I guess, diversify somewhat?
Well, I think whether or not it's a question of China, I think it's important to note that companies that are single asset, single jurisdiction companies will trade at a discount. And, we are definitely trading at a discount to our peers. We don't think that's warranted given the quality of the assets and the financial results that we're delivering, from those mines that we're operating, which we are growing. But our objective here is to grow the company, have a multi-asset platform where we're delivering a positive free cash flow from a number of different assets. And so we saw the El Domo mine, which was permitted and ready to be built, and we've been advancing it since we closed the acquisition. We saw the El Domo mine as a great next project for us to build.
Right, okay. And before we kind of move away entirely from the kind of China component, there has been a sort of escalation in terms of tensions around critical metals, not gold. Gold is gold. But is that affecting anything that you're doing in country? Does that warrant any kind of discount?
No. Really, when you look at what we're doing is we're delivering our concentrates that contain the silver, lead, zinc, some gold to smelters in China. We're paid based on the posted market prices for those metals, and once they've left our mine gate, we've been paid for them. We have no further stake in them or any interest. I like to joke that, the only thing we export out of China is dividends. And there isn't a tariff on dividends as of yet. So if on the other hand, it is important, though, to think of if tariffs do have an impact on, global trade and global economic activity and put a damper on commodity prices, whether precious or base metals, then we would be like no other, like every other mining company that would, have to navigate, what are global metal prices.
Right. And you talk about, obviously, exporting dividends. I like it. I've not heard that one before. Are there any issues around kind of capital repatriation or movement of currency with the Chinese aspect of your business?
No. The rules that are in place have been established for many years, and there's just look at every other Western brand or other company that's got manufacturing, based in China. The rules that apply is there's a withholding tax, which is 10%, which applies to dividends, paid out from the country. And that would apply whether you're building electric cars, shoes, or anything. If you're generating profits and distributing those, you pay those withholding taxes.
Right. Okay. And I know we have talked in the past about Chinese mining law and taxation policies, etc. And it seems to be you have, and you continue to operate successfully there, and you're producing the cash flow. So we won't go over all ground there. But let's talk about Ecuador, because obviously that's the new jurisdiction. I think perhaps people might have perception about political instability, past issues with nationalism, and all those sorts of things, doing business in country. What's the reality on the ground you've found so far?
Well, I think the reality on the ground, and there's an election taking place right now, so it'll be interesting to see how that turns out. But I think the reality on the ground is, Ecuador is a country that is endowed with great mineral resources. But at present, there's really only, 2 industrial scale mines in the country. And so El Domo would be the third. And I think the country has recognized that there's an opportunity to diversify its economy and add a stronger contribution from mining. And so I think there's a commitment within the country to support that. And I think that's, the evidence of that is in El Domo, getting the permits and being able to withstand a number of legal challenges for those permits, where we're in a position, to work with the government, the community, and move ahead and build a mine that's going to lead to employment, GDP contribution for the country. And hopefully we can do it a second time with the Condor project that we also have.
Absolutely. Well, let's talk about those things. And so, before we do, can you, the two mining companies that you referred to earlier are who?
Well, one is Lundin Gold, which has obviously been a phenomenal technical and financial success. And the other is Mirador, which is a large open pit copper gold operation.
Right. So let's look at what a company with your profile, with your balance sheet does in terms of, I guess, giving comfort to the Ecuadorian government and the Ministry of Mines, specifically about how you go about doing these things. So when you picked up the Ventus, and obviously we'll talk about Condor as well, project, El Domo, what were their expectations? Because it had kind of been a sort of a go slow project up until you came along, hadn't it?
Well, I think it was a go slow only from the standpoint that it's been a very tough very tough market for developers to secure the capital to move ahead, and on terms that preserve shareholder equity value, and so that's really what had sort of led Adventus to seek out either financing or strategic alternatives. And obviously, we came to terms on an acquisition. I think from a government standpoint, looking at the size of the project, feasibility study, capex outlined, just under $250 million to build the mine. There's a structure in place that Adventus had negotiated with Wheaton to provide them a gold and silver stream, which requires Wheaton to contribute $175 million. Of that 250. So based on those numbers, the $75 million difference was more than covered by the roughly $200 million in cash that we had on our balance sheet prior to the acquisition, and obviously prior to us having now completed a convertible debenture offering.
Right, and if I'm looking, I mean, you presumably looked at I know you have looked at a few projects before. Settling on this, but what are the kind of specific operational synergies that you're realizing by integrating El Domo into the current portfolio? For
an open pit, it's a high grade open pit. It's also a low tonnage open pit, but the tonnage and the throughput through the mill is very similar to the tonnage expansion that we just completed at Ying. So our Ying mines, we're operating at 2,500 tons per day, and we bumped that to 4,000 tons per day by adding flotation capacity. The mill at El Domo will be a flotation mill producing concentrates. So very similar to what we're doing at Ying and GC in China. And so we've just gone through the process of buying very similar equipment for the Ying expansion that will be needed for the mill at El Domo.
Right, and are there other kind of major geological differences between the two? And therefore, and if there are, what are they? Does that kind of cause problems technically with your team?
No, not really. They are different geologically, as El Domo is a VMS deposit, and it's higher grade in copper than what we're dealing with at both Ying and GC in China. Be more, epithermal type deposits, but similar in the sense of producing multiple concentrates, the base metal concentrates with the precious metals, reporting to those concentrates. So this will be a concentrate producer, just like we're operating in China.
Right. So there's nothing unconventional about this in terms of that kind of metallurgical composition is different, but the technologies required are not beyond the team that you've already got.
Very similar technologies and a very similar scale of operation.
Right.
As compared to the expansion.
Yeah.
And so in that regard, smaller than what we're used to dealing with in terms of tonnages now at Ying.
Right. Okay. Are there any kind of unexpected challenges in this sort of new jurisdiction? I get that you're produce it, you know how to produce gold. Your team are doing it successfully and throwing off cash, you know, with good margins. So what is it like working in Ecuador with the team and any sort of new additions to the team?
Well, they're certainly getting used to a different set of regulations, different practices. You know, who are the different suppliers that are in country to, you know, supply us with the goods and services. But, you know, ironically, we're finding even there, a lot of them are the same, whether it's the equipment suppliers, there'll be a lot of the same equipment and even some of the parties that we're looking at working with to execute on the construction operation of the mine are Chinese entities operating in Ecuador.
But how do you get that balance between, you know, a team who you know and trust in China, and, you know, managing that kind of social license, and also, you know, building up that kind of local workforce and whether it be training them or actually, you know, getting, you know, if you've already got the skills maybe, or they maybe already have got the skills. How do you get that balance right? Because when I was working in Africa, what I used to say a lot was, you know, just teams of Chinese workers coming in and just taking over. How do you manage it?
It's much more of a balance, and we recognize that. And our objective is to, and, you know, we've started on it, is to continue building a strong local team to execute in country, and that's sort of at all levels and sort of all different roles within the entities.
Does that does you have to kind of reset your expectations on how long things take as a result? Does it look more efficient working in China than it does in Ecuador?
I'd say there are challenges everywhere. There's government, there's bureaucracy, and it's just a matter of having the team that sort of understands what the process is. Sometimes the rules are a little bit different, but understanding what the process is and just being patient and applying ourselves to it. I think, we haven't had any huge negative surprises in Ecuador, and that's why we're still comfortable with our original target production date in the second half of 2026 for El Domo.
And how much contingency have you put in on that one? Because you've set the date, right? Well, the second half of 2026, but you're giving yourself some scope. But what have you put in contingency plan-wise?
Well, no, I think that factors in some areas where some things may take a little bit longer than others. But I think the key thing is from a development standpoint. We've got models and schedules that are looking at some of the key earth moving activities, and getting into ore in the open pit in sort of July, August of 2026.
Right.
And so if there's a bit of slippage, we can still hit the second half of 2026. Or if there's a situation in terms of the plant not being quite ready for another month or two, that's fine. We can deal with that. But we're comfortable that by the end of 2026, we'll start reporting production.
Right. And how are you feeling about this, sort of adding to the kind of commodity mix within the company? Other commodities, obviously, we know what you've been producing so far, but are you more comfortable with some than others when you take a sort of macro view globally?
Well, obviously, we like silver. We're very happy with silver. It's a very unique metal, given its characteristics and bridging both the precious and base metal attributes. And on the on the latter side, there's demand attributes for silver that we think paint a positive picture for the metal, not just now, which we're experiencing, but for the coming years. Obviously, based on what we've looked at in terms of other targets, we're positive on gold, and having made the move into Ecuador with El Domo and its revenue profile, we're very comfortable with copper. So I think that mix of commodities is open to us. We've got a stake in New Pacific, which has got some phenomenal silver projects, which down the road, maybe we'll be the ones to build them, maybe not. But certainly adding that kind of silver production, to our profile would be great, given that it's very hard as a silver company to grow in silver And, just look at our peers. There's not a lot of new assets that are being developed to grow silver production. Rather we're just seeing more M&A of existing assets.
Right. And talking of which, I kind of enjoy these conversations when I talk to producers, especially when it comes to M&A. They look at these economic studies and go, do you know what? Most of these economic studies are BS. They struggle to validate the numbers that they say. Now, obviously, you've seen enough to say, I think there's something good here. But in terms of the work that you've been doing today, and it's relatively early days still, but optimizing the last set of economic numbers that Adventus put out, the market, I guess has expectations from that. Do you think you can do better or not?
I think the first point to make is I think the numbers and the projections in those studies are actually quite good. And obviously, we are, we would be happy if we hit those numbers and we think they're achievable in terms of production profile and, and economics from that study. But there are some areas where we do think we can make some improvements. And so that's some of the work that we're going through right now. And until we have all of those answers, we don't want to give guidance multiple times on that. I think we've spoken, publicly about our view that we think we can trim back the initial capital cost based on looking at it a little bit differently, which we're doing. And we're also looking at a small tweak to the metallurgy that we think will improve precious metals recoveries overall and to the copper concentrate, which will have a benefit in the economics as well.
Right. Okay. And again, coming back to that point we made earlier about contingency plans, I know you guys are kind of feeling their way around the market in Ecuador in terms of logistics and supply chains. I mean, I guess recruitment, quite frankly. How do you think your team are adjusting to this new environment in which they're working, and what are the kind of main differences that you're seeing on a day-to-day basis?
Well, I think one of the things, and it's ironic because it's sort of looking back at how we operate with our existing mines. What we've set out to do in Ecuador is to shift the contracting model from we'll pass along what we experience in cost to you, the mining company, with a bit of a margin, which leaves us would leave us exposed to price increases based on unknowns. And instead what we've done is we said no, let's not do that. You pitch us on a quantity, on an all-in cost per ton, mined, moved, and you take on and you deal with those factors, and we'll pay you on that cost per ton basis. So doing that, it doesn't necessarily sound like much, but when you run through the calculations and you run through price times quantity, and the quantity is the tons, and we're looking at optimizing, how many tons are moved and when, and hopefully making some improvements on that. And then on the other side of the equation, having a hard and fast improvement on that effective price per ton. You multiply that together and you get a much better number.
So that's interesting. But how closely do you work with them on that one? Because if obviously you have done analysis on Ecuadorian mining operations compared to China, etc., and obviously labor, power, consumable costs. You'll have a view on that. But when you do this kind of structure that like you were talking about, do you work with them on the planning, and it's just a case of the cost is the cost? Because if I was them, I'd be looking for what's the optimum for us providing that service, not necessarily about being efficient and getting after all the ounces or pounds in the case of copper here.
Well, I think the answer is working with people who know and have experience with the costs so that they can price something that will generate a suitable return for them.
That's my point, though. It's a suitable return for them, but it doesn't necessarily eke out all of the margin for you necessarily. Is there a bit of an arbitrage there?
No, what we're looking at, and we've run through a competitive bidding process in this regard. We've been able to achieve costs that are better than what were in the study and used previously based on the other model of contracting. So is it the best one? Well, I can't say for certain. It's better than what was demonstrated in the previous economics.
Right.
And the one we picked is the best one based off of a competitive bidding process that we went through. And what it does is it insulates us from the surprises.
Yeah. For sure, that's on someone else, not you. Talking of this kind of type of analysis, in terms of the analysis you've done on ongoing investment on existing assets, China versus funding these kind of growth projects. Now, again, this isn't just about the money for you. So is it about risk mitigation or diversification?
Well, I think it's these activities in China have been and are expected to be very high return investments and activities, and given the cash flow that we're generating and the kind of cost profile and asset bases that we're dealing with, we have the ability, which is a bit of a rarity for narrow vein high grade underground mines, to carry a very healthy reserve base plus resources. That's allowed us to be able to do long-term planning because we know these mines are going to be running for a long time. Some of these incremental areas where we're making investments are very high return activities. We're going to do them no matter what because we could see a long and profitable future for these assets. At the same time, we're looking at these other growth opportunities and saying, what can they add to our story in terms of production profile, but again, more importantly, free cash flow generation.
Okay. And before we get on to Condor, because it's obviously underground are comfortable with that. El Domo open pit. What can you remind me of the numbers from the last feasibility study that was put out? What are we expecting? What are you expecting to see from this?
Yeah, so the feasibility parameters for El Domo is a 10-year mine life on an annual basis, producing 11,000 tons of copper, 26,000 ounces of gold, 12,000 tons of zinc, 490,000 ounces of silver, and then some small lead. And then looking at cost on a copper equivalent basis, production costs, all sustaining is $1.26 per pound.
Right.
Okay.
Okay. And there's, I guess, some exploration upside to that as well, is there?
Yeah. El Domo is one VMS deposit contained within the broader Curipamba block. And there's some previous exploration that was done that has identified some other targets on the block. But we're not spending a lot of time looking at that exploration right now because we've got a permitted mine to build that's got positive economics. Let's go and get the mine built and then use cash flow from the mine to develop it out further. Which again, you're talking about parallels. Like that's been our model at Ying.
Right, and you kind of referenced earlier, or you referenced several places that the strength of the balance sheet giving you some optionality in terms of not just these acquisitions, but your ability to get after it without having to worry to go back to the market at the moment. Does that? I mean, that obviously gives you some comfort for sure. Because I guess you're a shareholder, some comfort. For now, so how realistic is additional M&A anytime soon?
Well, it's very hard. It's very hard to predict. As we've been talking over the years and sort of working through, various opportunities that we went after and that got away, and obviously we didn't chase them and overpay for them. So it's hard to predict. But I think the key thing is in the position we're in now. With the funding that we have, we've expanded our sort of our target list And there's things that we can look at now that would have been a stretch before.
Right. I guess the dynamic in a market like this would be, if you can hit second half 2026 and ramp up into 2027, you're going to have a view on copper price, going to have a view on gold and silver, etc. It's a good time to be buying advanced development stories. Does the profile of these two recent processes kind of match your ambitions?
Well, I think I would actually answer that question a bit differently, in the sense that it's hard to make perfect predictions of what's going to be the state of the economies and metal prices 2 years from now. But we have assets that we're comfortable with at a range of metal prices, and in the meantime, can we actually buy maybe existing production, and so that when we hit the second half of 2026, as you mentioned, we're not dealing with revenues coming from two sources or two countries, but maybe three by that time.
Right. Well, it is, because obviously you've referenced the Pacific Metals in here. You're, what are you, 25% plus stake, did you say?
Yeah.
Something like that,
27? No, was it 27? 27,
yeah. They're kind of flatlining and kind of trailing off a bit. What do they need to kind of get them going? And is that something that you'd countenance looking at?
Well, it's focused on the current activities are focused on getting the permits to advance to build, either or both of silver sand and Carangas. And to be quite honest, if they are able to achieve that, as the expression that Andrew, CEO of New Pacific, says, it's the Hollywood problem. So if they're able to achieve that, we get a chance to look at the opportunity to do what we do best, which would be to buy an asset and build a mine or two. And if it's not for us to buy and build, maybe that's a function of somebody else being prepared to pay more for it than what it's worth to us, in which case we'll make a very nice return and we'll seek our growth elsewhere. But as it relates to New Pacific, we're happy, we're supportive of the current plan and monitoring the progress.
Right. Okay. But it's difficult. I say it's hard to kind of look at 2 years ahead. So have you got a long-term plan? You can't maybe guess the commodity prices, but what is the long-term plan here?
Well, our view for commodity prices is positive, whether that be silver or others, just because of the fact that, we see the economies continuing to grow. And there's not a lot of supply that we see coming out of the market. It's just, mines are getting old and tired, getting into lower grade. New mines are very hard to permit. So, we're positive on metals prices, but we're not, when we look at any of the targets that we're working on, we're not in our minds using aggressive, only the bullish metals prices. We're looking at being able to run assets that are going to make money in all stages of the cycle.
Getting a lot of inbound email right now. Probably asking the same questions. Okay, so let's look at the kind of the balance sheet. Then obviously it's clear what you're using the money for and facilities you've got available to you with Wheaton, etc. And maybe put some potential value of New Pacific, metals at some point down the line if the permitting allowing, etc. And with Condor, it's probably, I get a little bit more in your wheelhouse in the sense it's underground. What's the pace at which that's going to be able to move forward? Because it really has been hampered by access to cash in the last few years, and maybe some uncertainty on the ground as well. What do you feel you can do with Condor? Because I think you picked it up real cheap.
I think it was an asset that, to be honest, was stalled by the nature of the work and the conclusions of the study. And that study that was done concluded it was going to be a 600 million capex and run a massive open pit at 0.7 grams per ton gold. And so what do you do with that as a developer in this market? What do you do with that as even a mid-tier producer in that market? Do those economics and those returns justify that amount of capital? So when we've looked at it, we've scrapped that model and that approach, and what we've seen in the geology and the deposits that are there is the potential to come at it in a much more discrete fashion and a much more evolutionary fashion, a lot like, again, the way we've done things in China, which is focus on being able to make progress in terms of getting into the ore body, building an operation that can, generate positive margins, and then use those cash flows to grow it from there. And we think the model that, we have, like this year, our plans are to do some modest drilling, redo the resource work with a focus on an underground resource, and then transition that, if it makes sense, to doing a PEA, looking at it as a high-grade underground operation. Tied into that is the getting the permits to be able to do declines to ramp underground for exploration. And then if everything all ties together at the end, basically be able to say we've got, the economics which point to a positive margin project, and we have access to the ore body that we did to complete the exploration and validate the resource. Now do we have, the willing partners in the government, the community, to build what would be a profitable and contributing gold mine.
Right. So discrete being the key phrase there, I suspect, that 2021 PEA with the 600 million market cap, capex is, I guess, was slightly terrifying the market, but it was also sort of maybe not what people on the ground wanted to see. So why are you confident, or you must be confident enough to make the acquisition? Why are you confident to say that, well, actually, hey, guys, you may have got this wrong, but I think looking at the data, we can come at this and we can make this economic and we can get over some of the maybe social license issues as well. How much time did you spend on it?
Well, I think we did the work to look at the geology and the previous exploration and realized some of the work made sense and supported kind of our thesis. Some of it was focused on the other model. What we've seen was, in our minds, enough to say, and again, it comes down to if you've got good grades over decent widths in terms of gold, it doesn't take a lot of tons to be in a position where you're making money. And so, when we model that out, we can see an operation that will make money. So, we're not there yet, and we've got to do some work to get there to fully validate it. But, again, tie into what's been happening. And this happens to be in the south of the country, in the province, where Ecuador has, built a large copper gold mine, and where Lundin Gold has built a very profitable and very successful underground gold operation.
Ruta del Norte. Right. Okay. Does the fact that you've got cash, you're producing cash, does that mean that you can maybe get through and not worry about timing or funding the economic study phase? Can you get through that a little bit quicker?
Well, what we're looking at in terms of expenditures for this year is really very manageable in terms of the amount of exploration work we need to do, and then the rest of it is, a lot of it is kind of desktop work in terms of resource calculation and a PEA, and then the other work is putting together and paperwork with respect to filing for permits. So we have to put out sort of all the numbers as of yet for this year. We're going to do our fiscal 2026 budget here in about a month and a half. And at that point, we'll be able to point to what those expenditures are. And, it's very manageable for us.
It's very manageable for you, but I guess you've got this balance between like signaling to the market and saying, like, hey, we've got this asset, we are going to create value there, and saying within a certain time frame. And then the conversations you're going to have in country and be sensitive to the fact that although you are a producer, you're not a producer in country. So therefore you kind of got to find your way, through those sorts of conversations. So I guess that's why I was asking the question of, you've got money, you're not going to be rushed into this, but at the same time, you don't need to worry about timing the market to be able to raise capital for it either. The question around saving time was, because you are a producer, do you think you can skip a few phases, or is there kind of recognition that perhaps this you need to do this the right way, given you're not a producer in country?
Well, I think as a producer, and it's going to be our own money and our own people that have to, stand up and say this is going to be successful. We don't necessarily need to run, the same kind of, bankable feasibility studies with outside consultants. So no, yeah, that will mean that we'll be able to move things, quicker. And again, our model of transitioning from, advanced underground exploration to production would mean that if everything else lines up in terms of surface infrastructure, permitting, you've basically kind of already built the beginnings of your mine when you want to transition. But I'm not starting to go out and to project what kind of a mine will be producing for us from Condor in 2 years, because we have to get through this year and do the work that needs to get done and answer those questions.
So this year sounds like there's a lot of work to be done, but also maybe a lot of announcements as well. What do you think this does in terms of answering the question of, or the statement for you guys, and you've said it a few times, which is, I think we're woefully undervalued. Will this change things?
I think it will. I think people are starting to, put El Domo, and to a lesser degree Condor, in their models or in their evaluation. And right now, what sort of value to give for El Domo is going to be less than what you'll be giving it when, it's on the cusp of production or it's delivering. And so I think there's a quick build cycle when you think of it in terms of second half of 2026 compared to where we are well into Q1 of 2025. It's a quick build cycle, so we will start to, I think, see the fruits of that re-rate in the valuation here as we're demonstrate progress towards hitting that production target.
Okay, well look, let's kind of wrap it up there for now. That's super exciting, and obviously great to London buses. It is the phrase we use there. So if you're waiting for a bus and then all three come along at once, you're kind of in that territory a little bit. I would love to come back and talk about see how things are going in terms of your understanding of how things work in country, things like stability of power and infrastructure and access to fuel, explosive cyanide, and all those sort of logistics type things, which you're getting a grip on as things progress on the ground. Let's not forget an update on China as well. That's where the money is.
Well, we'll continue to put out obviously our financial results, which last quarter was a record quarter for the December quarter.
Yep.
Typically our first quarter, calendar quarter of the year, which is our fiscal fourth quarter, is the slowest because of Chinese New Year. But the big difference is we went into that quarter with 145,000 tons ore stockpiles, and a mill that has recently been expanded from 2,500 to 4,000 tons per day. So we're thinking this quarter will show some different numbers in terms of production, or we're seeing good prices. So that should be some good news. And over the coming months and years at Ying, as we continue to do these debottlenecking exercises to increase our production, we'll have some news items. El Domo, we've announced in January the first of 3 bid packages. Not all the details, mind you, but the first one has been signed. We're looking to sign package 2 and then package 3 here in the coming months, and so that will put us in a position where we'll be able to give more concrete guidance on some of those items that you mentioned: budget, timing, capex for the different elements that are needed to build El Domo.
Brilliant. Well, I look forward to getting that update. Congratulations. Well done, and good start to the year.
Thanks, Matt. Look forward to checking back with you in a couple of months.